What am I missing here, Francesco Guerrera? I mean, maybe this isn't a big deal. Why are you making such a big deal about it in your money and investing section?
Oh, it was on the front page, actually.
Yeah, okay. Why are you making such a big deal about this?
No, I think, well, it's a big deal for the company, and it's the company that, remember, sailed through the crisis with flying colors. No problems at all. Picked a couple of banks on the cheap, were on the way. Jamie Dimon, King of Wall Street, and now look at what a stumble they've produced. And whether they'll get out of that with the regulators on their back is going to be very, very tough.
Right. Dennis, big deal or not?
I'd say big-ish. First of all, if I could, I'd be buying those stocks. There's no way that JP Morgan is worth 10% less than it was yesterday.
Oh, but you see, they don't control their risk. They have no idea what's going on in their balance sheet.
You know, that may well be, obviously was true in this case, but I don't think it was worth 10 percentage points of value on the company.
That's about, let's call it 9 or 10. No, I don't think it's that much. I think $150 billion.
Okay, all right. So
is their market cap. So I think you're talking about, you know, somewhere in the $12–13 billion range.
The only thing I would say is they said there's going to be, the loss is $2 billion. And it could be up to $1 billion more. It could be actually more than that, because not everybody knows in the market that they have to sell those positions. So they'll just wait for them to sell.
And the reason why it's selling off is not because of the losses per se. It's because the view that Washington now is going to come down even harder on the banks when it comes to the Volcker rule. You're not buying it, Francesco?
No,
I had a little skeptical Italian shrug there.
I buy that. I think the real reason here is that Washington was waiting for this anyway. And they were going to come down on the banks pretty hard anyway, I think, especially in a politically charged pre-presidential election campaign. That was going to happen anyway. Now they have a perfect excuse, and the banks really can't say much.
Okay, Dennis, I want to turn to another article that was on WSJ.com, I believe it was in the paper earlier today, about Zoe Cruz.
Yes.
Zoe Cruz, once upon a time, was the great trader, the great bond fixed income person at Morgan Stanley. Right? Who was named or purported to be a possible contender to replace John Mack as CEO of Morgan Stanley.
Right.
Didn't work out that well for her. About, I don't know, they had huge losses one quarter back in 07, I believe, in their fixed income division that Zoe Cruz was running. She was then, well, I don't know, was thrown out from Morgan Stanley. We got a little photo of her. And then she was with capital seeded by Morgan Stanley, set up in her own hedge fund.
Well, that was a parting gift.
That was just announced today that they're closing down.
Yeah, okay.
Is it what we're seeing today?
What do people expect, Evan? It's like, will Wall Street ever learn? Does that mean, will Wall Street ever stop losing money? No, it will not stop losing money, because the other side of making money when you're trading is losing money. And so people in Washington in particular, and even people in the media say, you know, make it stop. Now, government bailouts, huge bad underwriting things, I get that. But the idea that somehow you can regulate something, somehow create rules so banks don't lose money, just seems absurd to me.
But there's one good thing and one bad thing about this Zoe thing, right? So the good thing is actually shows that Wall Street is Darwinian, right? She didn't do well, she lost money, the hedge fund closes, she goes home. I think that's a good thing. The bad thing was Morgan Stanley fired her. Zoe was fired by Morgan Stanley. She took responsibility, whether right or wrongly, for a massive trading loss that happened before the financial crisis, actually. Then Morgan Stanley, unbeknown to anybody until we reported this today, goes and gives it $20 million to see the hedge fund. The question for Morgan Stanley is, why?
Well, maybe CEO Mack wanted to basically not end up in the courts or in arbitration with her over an extended period of time.
It's not his money, right?
No, it is not.
Nor was it the money of Citigroup, which spent how much for Vic Panda's hedge fund? Like $800 million, I believe.
Right, but part of that deal was he actually came over. Yeah. He actually came over to Citi as part of that deal.
But that was, you know.
But can these so-called great traders, we had Bruno Ixel, we had Ina Drew, you know, she was superb at risk management for a 30-year career, and then all of a sudden she wasn't so superb. Can great traders, can they exist outside of a huge balance sheet, which is other people's money?
Some do, right?
Some do.
It's like in the hedge fund world, that's still other people's money, right? But it is money that they raise and that it is tied to them individually. So take Bridgewater Associates, the largest hedge fund in the world. Did they earn it? I'd say yes, they have. Okay. So it depends how you categorize balance sheet and other people's money.
What do you think will be the outcome of the $2 billion, $3 billion blunder, whatever it ends up being here at JP Morgan? If you had to guess, if we look at a few months from now, does anything really change on Wall Street?
Oh, I think first of all, a few heads will roll at JP Morgan. We'll see a few heads rolling in the next few days, and then we'll see how the fallout is and how far up this goes, right? Up the value chain at JP Morgan and the hierarchy at JP Morgan. Secondly, on Wall Street, well, there's no question now that the Volcker will be implemented. I think the main question is how much they tighten it precisely to capture this type of activities. Let's remember that this type of activities may have not been caught by the Volcker rule as written. So there'll be a certain pressure to tighten the rule to make sure that this type of hedging doesn't happen again.
One more lesson, I think, and that applies to Jamie Dimon, applies to every great trader. Know when to get out. Like Jamie Dimon should have announced his retirement. Should have been probably not in this case, but probably said I'm going to be out by June 2012 because he had a pristine record, right? He could have left a triumphant king, and now he's got a king with, like as you said, a blemish on his record. So the key to a long life is knowing when it's time to go.